All right, first up then, let's put the spotlight on Lighthouse Canton. It's a Singapore-based LC which marked their first close of the maiden debt fund. They're gearing up for their second vehicle. We want to understand the outlook about the debt venture market as well in India. And we've got with us Sanket Sinha. He's the Executive Director, Head of Asset Management at Lighthouse Canton. Thanks so much for taking time out. Sanket, to begin with, tell us a little bit more about the second vehicle.
Okay, so let's get straight to that. The second vehicle for equity investments we are about to launch, it's called LC Nueva Momentum Fund. It's essentially a vehicle that we are going to be using to make investments largely into companies which are emerging as winners from our first fund. The first fund was LC Nueva Venture Equity Fund, which we closed last year. So there are certain companies which have done really well. They have improved their operating metrics. They've been able to do up rounds, some of them. And we believe that given the venture equity investing climate, this is a good time to be backing some of these companies. We still believe that there's a lot of valuation upside. The venture equity environment is still not back to the kind of levels that we anticipate it to be. And therefore, this is a good time to be building a portfolio, particularly with companies that you've had an eye on for the last couple of years, where you've seen the performance, where you've seen the management team, their management style. And that's what LC Nueva Momentum Fund is all about. So the next 3 to 6 months is when we expect to close that fund, and probably in the next quarter or so we're going to start making investments from that fund. So that's about the venture equity fund. The mandate more or less remains same, early stage companies. As far as the debt fund is concerned, it's a plan for the later part of the year, and as you would have seen in my other interview, what I've said is that it's something that we are going to launch sometime towards the end of this year or early part of 2025. We are in the midst of closing our current venture debt fund, where we have seen a pretty encouraging response from LPs, both family offices as well as international LPs, which includes institutions as well. And we are at this point in time focusing on closing that fund before we get to the second fund. Second fund is part of the plan, but that's going to be later part of this year or early part of next year.
And what's the overall outlook when it comes to the venture debt market in the country?
The venture debt market in India, it's nearly tripled or quadrupled in the last 3 or 4 years since COVID struck. So sometime around 2019, 2020, the total disbursement which was happening from the venture debt funds was in the range of circa $300 million. 2023 was in the range of circa $1.1 billion. So the growth has been phenomenal. But we believe that we are still scratching the surface, because if you look at the penetration of venture debt as a percentage of venture equity investments, and you look at it over a cycle, you don't look at it in one particular year, but let's look at it over the last 3 or 4 years. Venture debt disbursement as a percentage of venture equity investment would have been in the range of 2.5, 3%, not more than that. Last year could have been an anomaly where venture debt as a percentage of venture equity was much higher, particularly because of the fact that 2023 was a subdued market for venture equity investments. So it's largely the denominator which was lower rather than the numerator picking up. And then we expect this 2.5, 3% kind of ratio to move more towards 8 to 10% over the next few years. And when I say few years, I mean, let's say half a decade, 5 years. If you look at the global average, and when I say global, I mean developed markets, North America, Europe, because, that's where venture debt is quite, has been around for quite a while. In those markets, venture debt as a percentage of venture equity ranges between 15 to 20%. Now, by no means I'm saying that we are going to get to 15 to 20% over the next few years. It's going to be a journey. It's going to be an evolutionary process. Uh, and we expect that over the next 5 years or so, we should be at around 8 to 10%. And the venture equity market itself is growing. So what's happening is that the market is growing, and then that penetration will also increase, the penetration of venture debt. So overall, what's now a 1.2 billion dollar market, or 1.2 billion dollars annual disbursement, we expect it to be in the range of $5 to $6 billion over the next half a decade or so. So there's tremendous growth opportunity that the market is presenting. We are quite optimistic about the startup ecosystem per se, the way the startup ecosystem in India is evolving. And with evolution of the ecosystem, we expect that it's going to uh, be able to absorb much more, alternative forms of capital beyond equity, which includes venture debt, as we move forward. So there's a large opportunity. We believe that the penetration is low, and we also firmly believe that the startup ecosystem itself is going to do well. So both of these things taken together, we feel very optimistic about venture debt as a product, in the next few years.
So, is there an inclination sector wise when it comes to health tech, consumer tech? What's the outlook on fintech and the education tech business as well?
So we are sector agnostic, to be honest, and we are essentially a bottom-up manager. We first like the companies, and then we try to form a sectoral view. So first we do a bottom-up analysis, and then we do top-down. So we don't really have any sector tilt per se, but when it comes to sectors which are big consumers of capital, where capital is a raw material. Fintech, of course, is a name or is a sector that would come to your mind first. So by virtue of the fact that capital is a raw material for lending businesses, we would have maximum allocation to fintech companies. So we've got a few fintech lenders in our portfolio, and we expect fintech to be close to a fourth of our portfolio, and that's where it is at this point in time, and we expect that to continue. The second sector, which again is a consumer of capital, is B2B commerce, sector, where companies require a lot of working capital because they have receivables and payables on the balance sheet at all points in time. So B2B commerce, of course, would be there in our portfolio. So maybe 10 to 15% of the portfolio would be to B2B commerce companies. We are also investing in health tech. We are extremely optimistic about health tech as a sector going forward and then that's got to do a lot with the growth of Indian economy, the income levels going up, new people joining the workforce, the labor force, the wealth level going up, and increased awareness about healthcare, at an overall level. That's going to be a big driving factor behind the growth of health tech as a sector. So health tech is something that we have been investing in. EV ecosystem, electric vehicle ecosystem, again, is a sector that we have been investing in, and we are optimistic about that sector. So, these are some of the sectors that are top of my mind that we have been investing in.
What kind of portfolio companies do you have and then would you look at potentially?
Yeah, so we've got nearly 18 companies in the portfolio at this point in time. Let me just talk about some of the portfolio companies that we invested in initially. Rentomojo, Zolo Stays, Blue Smart, uh, Loan Tap. These are some of the companies that we have in the portfolio, and all of these companies are, leaders in the segment or the sectors that they operate in. If not, number one, then definitely amongst the top three, four. And if you see, all these companies that I just spoke about would fall somewhere, in the sectors that we have been focusing on. So Rento Mojo, for example, would be, it's a consumer tech, but at the end of the day, it's in the business of leasing, furniture, electronic appliances, so on and so forth. And leasing businesses are fintech businesses. So Rento Mojo would fall in that category. Blue Smart, again, as I said, we are big on EV ecosystem. So we are looking at the companies which are part of EV ecosystem. Blue Smart is a champion there. Loan Tap, again, a fintech lender. So these are some of the companies that we've been investing in. We've got an exhaustive list, but some of the names. Needless to mention, the other companies are equally important. But for the purposes of this discussion, I cannot
And long term, Sanket, I just wanted to understand from you what the outlook is when it comes to the future of venture debt.
So the philosophy would be similar. So look, I think one thing that we are one large or one big theme or a big trend that we are playing on is Young India. Uh, we have been reading about India's demographic dividends, so on and so forth. I think it's being written about for the last couple of decades. But we are seeing that playing out in a big way right now. So India's average age is give or take 28 and a half. India is producing, and I don't want to get to the numbers, but a large number of graduates every year who are ready to join the workforce, labor force. Uh, and with that, there's an expectation, or rather, there's an aspiration to have better lifestyle, to improve their living standards, so on and so forth. And that's where, some of the portfolio companies that we have are playing a big role, whether it's a credit company, a company which is providing credit, or a company which is part of shared economy, like, Rento Mojo, Zolo Stays, so on and so forth. 20 years ago, these kind of options were not available. So people had to really wait for a long time before they could, start making capital outlay for, furnishing their house, or, buying their first TV, buying the first fridge. But now, as soon as you join the workforce, if you're a white collared worker, you can afford these things. And thanks to, innovative companies such as, the ones that I just spoke about. That's a theme that we are playing on. And our next fund on the venture debt side would continue to play on that theme, because we believe that it's a structural trend which is there for the next, few decades to come. So, what's working for us, we want to continue playing on that theme going forward as well.